Need everyone, please, can you hear me?
Yes, sir, we can hear you.
People are the worst set of things I've seen. It's my face people should be looking for my face up and down. Don't face what you are here to do. Is that why we are here? Is that why we are here? You should be looking for my face. Trying to check something. People are not serious people. Who do I'm going to come for your induction? I will not come. You not see me there. Oh yeah, can we start? Oh, yeah. Shall we?
Yes, we shall.
Ready, we
Mr.
are
Maka,
ready.
Mr. Maka, is it that started this my face thing? Now you. Now I did they see you. No one. I don't mark your face like that. I turned off that video. I don't know why that thing did not turn on. Our. Oh yeah. Do you know that this thing that happened here? It happened this is their last induction. This is the last induction. Mr. Kabiru was not opportune to go. So he now asked me to go and represent him. But you know Mr. Kabiru, everybody knows Mr. Kabiru. So there's a way that you just see him, then they will be apex students. But me, who knows me? Nobody knows me. I just did my day. Everybody's now typing on the group chat. Where is he? Where is he? Where is he? And most of the people that are typing were actually passing my phones like this. And I was saying, I'm wearing red. I just the way I did. It's good to sometimes it's good to be unknown. Sometimes it's good to be unknown. It's easier for me. Before when I would go arrest me, it's easier for me to lecture that way and be free that way. So yeah, where did we stop? Sharp. You know. No, you. Where did we stop? Oh yeah,
Then we are going into adjust.
I think I wanted to solve one question on combined company.
Okay, yeah.
So I think I told you guys to go. So I think I told you guys to go and solve the MPV. Did anybody solve it? Please signify. I told you guys I'm not going to solve it though. That 500 bucks, blah 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 blah. I just want to solve the WACC. Then I will do introduction to APV. You guys know I'm not supposed to have this class. I just decided to just step in. So I just want to do introduction to adjusted present value. So maybe by Monday, by the grace of God, we'll start APV. I'll solve the two questions on that day. Then I'll know I'm done with APV. Then we'll move to international capital budgeting. Then from there I'm done. So I'll just sorry, I need to move a little bit faster now. So I need you guys to also up your pace. Yes, I notice there is a portfolio theory in your syllabus. So I need you guys to also up your pace, please. We have a lot to do, a lot. So I need you guys to actually also up your pace. So sharp. So then, okay, Miss Davina, what did you get for your MPV? What did you get for your MPV? Yeah. Yeah. Oh. Who solved it now? And nobody here solved that question. Wait, can you guys hear me? Let me first confirm if you guys can hear me first.
Yes, sir.
Did anybody solve that question? Nobody solved it.
Yes,
I
sir.
tried it out.
I've been calling you since morning. You don't answer me now. What's your MPV?
Sorry, my MPV was 404,000.
Okay. Apart from Miss Davina, who else solved that question? Let me know if I should move on because I
I
don't really
I
have
did.
strength. What do you have?
I did. 404.
442, Abi?
404, yes. And the MR is 17%.
Okay, that's true. That's true. That's true. I said you should not do the MPV. How did you guys get the discount factor when you got 404? People copied it from somewhere. I think it's an American question. So I'm sure you guys copied it from somewhere. That's why you got it. Because
No, we actually
if you are
solved
just
it.
there's no way you could have
No,
gotten.
sir.
I solved it.
I actually solved it. That was the question I asked you one time like that about the combined company.
That means you solved it before getting here now, before we got here. Yeah, that's the meaning. I don't need the people's answer. For people that we started together, you know, as if you've been reading before. They started together. Did any of you solve it? I need to know, did you solve the cash
sir.
flow?
I solved it.
So you solved the cash flow without you didn't get to the present value now.
No, I didn't do the present value.
No, sir.
Yeah, people should call figures for me then. I'm just going to put the figures. I don't have strength to be doing the to do where is our working note. I don't have strength to do all those things again. I'm just going to put the figure. I will not do the workings. People should go and do workings by yourself. I'm just going to put the figure. So coming. So what's today's date, please?
3rd. 3rd of September.
3rd of September 2025. What's the name of the company again? Say solution to assignment. What's the name of the company, please?
Abele Jariam.
Abele Jayon. Abele Jayon.
Madam, what did you call it again? Abele Jayon, but it's about Asao. Abego. Madam, what Miss Unena,
Abele Jayon.
It's not me, yo. It's not me.
Who is that person? Let me know so I will teach you now.
I'm the one.
Abel Miss Chinyere. That thing that you pronounce. You know follow. You know follow. Is Abele Jayon. What does it? Abele Jayon.
Okay, Abele Jayon PLC.
It's still at, but I'll manage it. I'll manage it. What it means is, I don't know, the meaning is stuff. I cannot go into the meaning, but like the meaning is it deep, but like it has a meaning. Anyways, don't let me go there. That's not why I'm here. So Abele Jayon PLC. Okay. Yeah, so you guys will call the figures for people that solve. People that not solve it, you're on your own. No. Abele Jayon PLC. How many years is it still 5 years?
Yes, sir.
Is it 5 years?
Yes,
So
sir.
let me just copy all this. So let me just copy all these figures then. Okay. So let me remove all these ones. So let me just remove all these ones.
Sir, please, you're not sharing yet.
Sorry. Old age. Old age. I'm gonna share now. I'm sure you guys should be able to see now, yeah? Please have an engagement for 8 sharp. So I need to do whatever I want to do and leave here by 8. I sneaked in and sneaked out. I just came here to do 2 hours, 1 hour. That's why I moved the class to 6:30, because 6 to 8 or 7 to 8 would have not been enough. So that's 6:30 to 8. So I'll leave here by 8 sharp. I hope you guys can see my screen now.
Yes, sir.
Okay. So I need the figures ASAP. Sorry, I'm coming. Let me delete the figures here. Oh yeah, what's my sales for year one? Just call figure for me, please. No, really. Is this to the power of what? Million or thousand?
Millions.
It's 5 years, yeah? 0, 1, 2, 3, 4, 5. So yeah, my sales. Oh, yeah. My sales for year one.
1,050. 1,050 naira.
Year two.
1,323.
People should not worry. I have the figure. I've done it myself. So I have the figure here. So anyone that is not correct, I will know. Oh yeah, I'm with you. Oh yeah, madam. Fast. Ugh.
1505.
Please be fast with the figure. You're just calling figure now. I'm not calculating anything. Oh yeah.
1945.
Just be
1787.
calling. Don't worry, I'm active.
1787.
1787.
Variable cost.
416.
416.
Year two.
519.
Year three.
585.
Year four.
749.
Year five.
681.
Fixed cost.
$54.
Yeah.
$58. $63. $58. Okay. $68.
Year four.
$73.
Do we have training and development cost?
No.
Yes, sir.
Oh, okay.
So what's my profit?
580.
Profit.
580.
Year two.
746.
Year three.
857.
Year four.
1128.
Year five.
1033.
My tax are 20%. Is it 20? I'll be what?
25%.
25%.
Yeah, my tax are 25%.
145. 187. 214. 282. 258.
What's my tax savings?
75 per
Across the board.
annum. Yes, sir.
My working capital. My working capital.
105. 105 for 0 year.
Year one.
27.
27.
Year two.
19. 19.
Year three.
45.
35.
44.
45.
44.
It's 44. You approximate now.
Year four. I have 44 year two.
16. 16.
Last one.
179.
179.
My initial outlay.
2,000.
2,000.
My scrap value.
No scrap.
You don't have scrap.
No scrap, sir.
No scrap. No scrap.
Mm-hmm. What are you doing now? What am I doing then? This old age thing. So what's my next cash flow? The net cash flow 2,105, yeah. Oh yeah.
483.
Year one.
483.
Year two.
615.
Year three.
674.
Year four.
937.
Year five.
Year 5. 1029.
You see that I'm pressing it the way you are calling this because I have it here also. Now let me attend to something. I know some of you are like, why am I not solving? Why am I actually listening to their figures? I gave this as an assignment. Now, if you did it and you have this figure, lucky you. If you did it and you don't, you can compare. Please, hold on. If you did it and you don't have the same figure, hold on first. I'm coming. But if you did not do it at all, like you did not even attempt it, you are on your own. No? You are honestly on your own. Because even me, that I'm a lecturer, that I'm not a student, I took Bible and I took paper and I took time. We finished class on Monday and I solved this question by myself and on. I don't know how I can show you I don't want to show you guys my camera so that you guys will not see my face. But I could show you my paper so that you guys will see that I actually also solved it. I'm not writing exam. People that are writing exam. Me, I'm not. So it's you that you should be solving it, not me. So anything that you feel like, I don't know. But I already told you from in the last class, I'm not going to solve this question because I feel like I already solved enough question on this particular MPV. And I think we are way behind. So I need to move on. So what I can do for you is, if you know you solved this question and you're having any challenge with the MPV, can you signify, please? If you know you attempted it, maybe you now got stuck, or you have a question, or there's something that you did not understand that did not make you go forward, can you signify? So so that I will take that question and I will trash it. For people that solve it new, so I'm just going to do that. So, Miss Ifena, please talk to me, please.
Good evening, sir. Please, my question
Ifena,
is,
good evening.
My question is on this apportioned head charge of 25 million. Why wasn't it added? Because I saw that it's included, but we didn't add it here, and I added it to my.
Is included. What's the meaning of apportioned head cost?
Of 25 million.
What's the meaning of apportioned head
cost? Fixed cost.
Thank you very much.
I was thinking like
now listen to me. Yes, it's actually like fixed cost, but yeah, listen to me. Apportioned head cost. What apportioned head cost? Although that particular in the question, I think the apportioned head cost is also increasing. Yeah, it's incremental. Yes or yes?
Yes. Yes. By 10% per annum.
Okay, it will rise by 10% per annum. Good. Now, let me just say something. Apportioned head cost is like fixed cost, agreed. But the only difference in this particular fixed cost and this apportioned head cost is this particular fixed cost that we are adding is how would I say it? It is particular to this investment. What apportioned head cost means is they are just apportioning a particular cost to us as an organization or as an investment. This is what I'm saying. You want to go into this business. It does not mean you are going to buy a new land now. It necessarily does not even mean that you would still use the same, maybe tank water. You will still use the same electricity that you were doing something before. Now you are just branching into do another thing. You still it's inside that facility. You still the same. You will still use the lights of the organization. You most likely the same security that is there is still the same security that would still be there. What apportioned head cost means that they just gave that particular investment a portion of those costs. Say, okay, we're paying, we spare our security 20,000. Okay, for your own investment, take 10,000. So that okay, this one takes 10,000. If you don't go inside that particular, if you don't do that particular investment, won't they pay security? If you don't go inside that particular investment, won't they buy light? If you don't go for that particular investment, they will share pump water for the tank. That land that is there, you bought the land already. Rent, you will still pay rent, either you go for that particular investment or not. It makes apportioned head cost an irrelevant cash flow. This particular fixed cost became a relevant cash flow because it is particular to the unit. I don't know if you are getting it. It is particular to that. It is based on that particular investment. Although it doesn't vary with that particular unit, agreed. But it is particular to this investment. If we don't do that another investment, that apportioned head cost would still be paid, would still be incurred regardless. But this particular fixed cost was not, how would I say it? It was not. Don't forget yesterday when we spoke about assumptions made. We also, part of the assumptions I gave you was the fixed cost. That you are assuming that all the fixed costs, all the variables given to you are irrelevant cash flow. Is an assumption. That is because that fixed cost was not broken down. So you are just assuming that the fixed cost is relevant to the cash flow. But this apportioned head cost was stated that it is an apportioned head cost. So it does not become a relevant cash flow because they have let you know that it was apportioned to you. So it means that either you go for that investment or you don't. That particular expense will still be incurred. That particular money would still be spent. So it does not become a relevant cash flow to this investment. Mr. Infina, are we
Yes, sir.
good?
Thank you so much.
You're very welcome. Yeah, Kendi, you know, sir. Sharp. Yeah.
Sorry, sir. It's a
Okay.
mistake.
You should not be putting your hand up by mistake. You know they pay you now. Yeah, Mr. Solomon, sharp. These questions are getting too much. I just wanted 2, 3, 4 questions. Oh yeah, Solomon.
Yeah, good evening.
Sharp.
Good evening.
Good evening.
This my question is as regards this working capital. I'm still having challenges on how, because I was just charging the 10% on the sales revenue based on what was given in the question. If you can just throw more light on that working capital, so thank you.
Okay, what was the figure of your sales that you had? We are.
So for the first year, the sales revenue was 1,015.
So your working capital is 105, Abi?
Yes, 105, yes, sir.
Your year 2 is 132, Abi?
Yes, 132. 1323, yes.
Your year 3 is 151.
Yes, exactly,
yes,
sir.
Your year 4 is 195.
Yes. Exactly, yes.
Yeah, then your year 5 is 179.
179, yes.
Now, where the challenge is or where you most likely would have made mistakes is you didn't take the differences. Don't forget what I told you. Working capital, only take the differences of the working capital. That's the assumptions of working capital. I gave you the example. I gave you the scenario the other way. I said that if you want to go into a new business, let's say you want to go into gas. I know about filling station. That's why I like to use that as an example. You want to go into filling station. After you've done all your old tanks and all those things, you will need about say 20, 30, 40 million as working capital for you to go and be getting fuel, then to be selling. Now, what I'm saying is the first 40,000 naira, the first 40 million invested is a working capital. Now that 40 million has gone. When that 40 million came back after the first year 1, they now told you that okay, your working capital, that okay, 40,000 naira can no longer buy a full tank. It's now 41 million. Now that 41 million, would you go ahead and go and source for 41 million fresh again? No, now you will just source for 1 million naira to add to the 40 million on ground. So it's just the differences in the working capital that we used to take. So according to the question, our first working capital was 105, then the second year was 132. So the meaning is additional working capital has been taken. So you just take the difference. 105 was already on ground before. So you just take the differences. So I think the differences should be 27, 105. Your year 1 will still be year 1 now. Yes, now it's still the first one. You don't have anything to subtract from now. So your year one will still be
Yeah,
year one. Your year two will
that's
now
your
be
zero, sir.
7. Hold on. We are still doing the incremental first before you do the relevant here. Now, have you forgotten the way we should do it? Let me do working capital for you guys. ASAP.
Thank you, sir.
What people will say I'm wicked. Where's this? Okay, I've already deleted. Hold on. Where's the thing where's the new date and all the new thing that I wrote? Don't delete. Okay, sorry. Old age. Really old age. So let me copy working capital. I was looking for what was already there. Let me just copy working capital real quick. I'm coming. Working capital. What was our workings of working capital? I wish I will solve this working capital. I cannot find working capital workings again. If you see it, let me know. Working capital. Okay, see it here. Now, this is what I was saying. So, what's the figure for our sales?
Okay.
Yeah.
1050. 1050 for year 1.
Mm-hmm.
Year 2. 1323.
Year 3.
1505.
Year 4.
1945.
Year 5.
1786.
You have 87, yeah, sure. Anyways, so I'm coming. So if you now come here, so you now say your working capital at 10%, Abi. So you say your working capital at 10%. So this one you have 105. This one you have 132. This one you have 151. Please confirm the figures. This one you have 195. Then this one you have 179. Good. So now what I was telling you is the differences is just so for me, and I'll take the differences first. So your year one still remains your year one as 105. Let's take the differences first. So you can call these changes. Okay, let me say you call these changes in working capital. This is not the working capital you are taking to your book, to your MPV that you are put that for the MPV that you are calculating. You are just calculating the changes first. 103, 132 minus 105. What do I have? Oh yeah.
27.
27. The next one, what do I have?
19.
18.
Next one, what do I have?
44.
Next one, what do I have?
16.
So you will recoup everything at the end of the year now. So this one is going to be going to be negative. Although everything is going to be negative anyways. So you recoup everything at the end of the year. Yeah, what's the total?
178. No, yes.
One what? Like this? So after you've done this now, you now come and do relevant year. So this relevant year now is now the year that you would take, the year that you would put all of them, like this is the year that you now put all of them in your books. So this 105 goes to your year 0, year 1, year 2, year 3, year 4, then the total goes to your year 5. That's how we have the figures. Okay, 179. That's how we have the figures that we had up there. Did you understand now?
Hello, sir. Yes, I can hear you. If you should add all those figures from year 1 to year 4. Yes, but still, I think that year 3, there is a statement because I guess it wasn't in bracket sign. How did they do it, sir?
Which statement, though? Can you be fast? Which
27 plus 8, 27 plus 18 plus 44 plus 16. And 105 won't give 178. This is my calculator.
What would it give?
105 plus 27 plus 18.
It will give 211.
Sorry, 210, sir.
211. 200.
You deduct 16 now.
That means there's a positive among them now.
Sir, the 16 is meant to be deducted because it's less than the first year 4.
Yeah, what is positive?
Year 4.
The first positive, Abi. Positive
Yes, yes. Positive 16.
what? Okay. Abi?
Yes, yes.
So is the difference is just subtraction. 132 minus 105, 151 minus this minus this minus this. Is just is what is happening there. Please, are we fine? Or at least know why I'm here. Oh yeah. Mr. Solomon, are you good?
Yeah, thank you, sir.
You're welcome. Oh yeah, Mr. Lucky, sharp. Mr. Lucky,
Sorry, good evening, sir.
Good evening.
Sorry, it's just a quick question. This apportioned overhead cost that we're taking as irrelevant cost, is there any tendency or can they bring up a question where it becomes relevant, or whenever we see it, we always treat it as irrelevant cost?
It is an irrelevant cost. It is not. It's never. I don't want to use the word never, but it would not. I don't think it would be a relevant cost. It's always irrelevant cost.
Okay, it's always irrelevant cost. All right, thank you.
But do you guys know the beautiful thing about SFM? The beautiful thing about SFM is you can assume. Yes, now
Okay.
this same question. If I want to solve it, if I put apportion cost, just go and put it in your assumption. That was assumed that apportion cost is a relevant cost. They will give you your mark. Don't just stop there. You can comfortably assume. You can put figure there and move on. Yes, now you can assume that is some question. They say state your assumptions. Even if they say state it or don't state it, go and state it. Don't even making sense. Even if the examiner does not say state it, always state your assumption.
Yeah.
Say that you assume that apportion head cost is a relevant cash flow, even though you know that it's not. But what I'm saying is the basic one that me and you know, do it.
Yeah.
When it gets to the ones that are tricky, say like that training and development cost of yesterday that we solved, I think on Monday. If you don't know if it's a relevant cost or irrelevant cost, anyone you use it as, just go and put it under your assumption.
Okay.
Thank you.
Thank you very much, sir.
You're welcome. Yeah, damn, your question, sharp. I think that's the last question I'm taking. I need to move to the.
Sir, this is not a question actually, but it's just like I'm trying to understand the apportioned cost. To me, I feel like apportioned cost should be a relevant cost to me because
we are saying add it to your own now.
Okay.
We are saying the same thing. For me, my own as a lecturer, I've told you it's not a relevant cash flow. But if you feel like it's irrelevant, add it to your own. It's not even hard. When you add it, you want to put in your assumption that you assume that it is a relevant cash flow. For me, I'm telling you that apportion head cost is not a relevant cash flow. If you now think you know very well and it's a relevant cash flow, you want to put it there. But go and put it in your assumption that it's a relevant cash flow. But me, I'm telling you that it's not a relevant cash flow. Thank you very much. Next. We have no question. Please let me move to what I want to do today. So the cost of capital is what I want to is why I'm here. I don't want to come and take you MPV, or I've done all this previously. So let's do our what's the name? Our what's the name again now? Our cost of capital. Please, somebody read the question. Somebody read that part of the cost of capital for me. That part that has the information on cost of capital. Real quick, please. Let me turn on this light. Oh, yeah. Let's go back. I'm first off my business. First, so somebody should read that place that adds the cost of capital information for me now. People are making this thing difficult too.
Okay, let me read, sir.
Go on.
The company uses a current weighted average cost of capital of 11% to appraise all projects. The asset beta of the company is 1.2. Equity beta is 1.6. Risk-free rate is 5%, while the market premium is 7%. Then I said the finance director is of the view that it is not appropriate to use the existing WACC to appraise the new project. He has identified a listed company which currently produces cement and packaged fruit drinks. The company has the following financial statistics. Equity beta 1.82, debt 0.40, debt to equity ratio 40%. 60% of the market value of the company is attributable to cement production, while 40% of the value is attributed to the fruit drinks division. The fruit drinks division has equity beta of 0.8. The new project is expected to move to the target. Okay, the new project is expected to move name of the company to the target debt to equity ratio of 30%. Tax rate is 25% for the two companies and is paid in the year profit is made.
Now, thank you. Thank you. Thank you very much. Now, the challenge with the question is we could have done it straight. We could have done it normally the way we used to do it. We could have done it normally the way we could have done it. The way we used to do our normal project specific cost of capital. Now you gear, and do all these things. But the challenge with this particular question is that when you want to ungear, you always ungear with proxy companies information, Abi. But unfortunately, they could not find the proxy. Don't forget that they are into cement, Abi. But they could not find the proxy company that is into cement. They now found a proxy company that is into cement, but also does food drink. Let me give you an example. I want to go into cement now. And I'll say, okay, I want to. I cannot find any other cement company. And I decide to use Dangote. But the problem is I cannot use Dangote's asset beta or equity. I cannot use anyone because both its equity beta is not just for cement. Its equity beta is for cement, for sugar, for spaghetti, all those. So I cannot use it. So Dangote is a combined company. So what do? You need to remove the element. You need to remove the element of the spaghetti, the sugar, so that you're just left to the equity beta of the cement company. That is the challenge they had in this question because they could not find a cement company. What they found was a cement and a fruit drink. So they needed to remove the fruit drink asset beta. So that is just left with what? So that they are just left with what's the name? So they're just left with the cement company's asset beta now. So what do you now do now? So there's a formula that you use, but let's bring out our variable first. So let's say our step one now. So you say step one. What's our step one? What's our step one? Oh,
identify the proxy company.
Identify the proxy company. What's the proxy company? What's the proxy company's name now? You people are low today. Why should I? Do you need me to call people? I need today of all days that you people are now slow like this. Please, what's the proxy company's name?
No name was given. Just
there was no name given in the question.
Tell me that there is no name given now. Why are you people now silent? So identify the proxy company, no name. Okay. So now let's bring out our variables. Let's bring out our variables from here. So you say combined. Let's bring out our variables. You say combined the combined company equity better. Abi? Combined company equity better. So let me write it here. Say cement and food drinks. What's the value?
1.8.
1.082.
1.82. 1.82. Did they give us the better equity of the food drink? Were we given? Are we giving the equity better of food drink? They will obviously give us now, since we are looking for that of cement.
0.8.
Yeah, 0.8.
0.8.
Of food drink. What do I need again? Okay, were we giving market value? Market value of anyone? Market value of cement? Market value of food? Were we giving anyone?
Yes,
Yes, 60%.
What did they say? What did they say there?
60% of the
Market value of the company is
60% of
attributed to
market
cement
value.
production.
60% is for cement, Abi? Good. So you will
Yes,
say
yes.
market value of cement is equals to 60%.
Yes, sir.
While market value of food drink is equals to 40%. Since we have all these ones now, we are good now. So let's now go and put this in our combined companies, in our combined company formula now. So you say the combined company better equity is equals to if you go, no, just not pay. So you now say combine. So this is now this. So the formula is now, sorry. Oh. So you now say that is your better equity of combined, or let me say, sorry, your better equity of cement, say your BE, your better equity of cement times your market value. Everything here will be for cement, your market value of cement over the total market value of both cement and fruit. You close the bracket, plus you now say let me copy this. We are trying to get our better equity of cement. We don't need that of fruit. We don't. You now say better equity of fruit multiplied by the market value of fruit over the total market value of cement, and that of what? And that of fruit. Yeah, now that we have our variables, now let's put. So what's the combined company? What's the combined company better equity?
1.82.
Sorry, is this the talk?
No.
Gonna keep on keeping on.
Please, while we are waiting for him to come back, can someone help with this working capital? That A3, why was it recouped, Abi? Why was it positive? Thank you.
It was positive because if you see the year preceding, it was lower than the year preceding. So it's like you needed 15 naira, but you actually have 17 naira in your account presently. So the 20 naira difference have to be in positive. Do you understand?
And in addition to that, from year one, he injected money. Year two, he added it. Then the next one, the money has reduced instead of increasing. So the percentage of that reduction, that's what I've not seen whether it's year 3 or year 4. But what happened, instead of the money to increase again as it's keep on increasing, it now reduced. So that's why it's positive instead of negative. I think that's what you're asking.
Another way you can actually still explain it is that working capital is actually an expenses, an outflow. Do you get? Is what you incur in the process of carrying out the investment. So in those first 0 to the 3rd year, they were making the expenses. But at the 4th year, when you do the difference, you see that it wasn't an increase. If it is an increase, you know that it is expense. If it is a deduction, it means that it is an inflow. You know, the expenses used to be outflow, but this deduction now is now an inflow, like an income. So that was why when we added it, the remaining, because working capital is supposed to be taken back at the end of the investment. So the remaining balancing figure was now what was brought at that final year, that was now recouped at that final year. So when it is increasing, it is an outflow. When it is decreasing, you know it is an inflow. An income just came in, so it will reduce the balance.
I think
Thank
the
you very
lecturer is
much,
back.
madam. Thank you, madam. Oh yeah, please, what do I have here? What do I have here? What do I have here? What do I have for this one? Oh yeah. Like, what do I have for this box?
$0.32.
0.32.
Yes, sir.
So what do we do now? So you collect like terms now.
Shut up and get out.
That's how. Collect like terms. So you bring this one to this other side, Abby. You bring this one here. So you're saying 0.60 BEC is equals to what? 1.82 minus 0.32. What do I have?
From 0.62 BEC equals to 1.5. That's right there.
1.2.
1.5.
1.5.
1.5.
1.2.
5. 1.5.
5.
So divide both sides by 0.60. What do I have?
2.5.
2.5.
So it means that your so it now means that your what? It now means that your it means that your equity beta, but this equity beta now is your equity beta geared, like of the proxy company. That's what it's given to you. So you know, so it means that your beta equity equals to 2.5 for what? For the cement, maybe company, for the cement company. That's the meaning. So it's 2.5 for the cement, is 1.82. I mean, it's 0.8 for the fruit drink. So it's 2.5 for the cement. So now this is what they should have given to you in the question. They now give you combination of the two. So you've now separated it now. So you've now separated. I know some of you now, your thoughts would be that combination of the two is 1.8. Why is this one 2.5? No. Can you guys hear me? Hello.
Yes, sir. Yes, sir.
Yes.
We can hear you.
Okay. I was saying that I'm sure that some of you, your thought is, why is this one, why is for the combined company 1.8? For cement alone is now 2.5. For it doesn't work the way you are thinking about it. It just doesn't work like that. So, but the equity beta, you don't forget that what we are measuring is just risk. Some of this beta equity and all those risks are some of the figures, they are assumptions. So it doesn't work the way you're thinking about it. So 2.5 for the cement company. Now we can go ahead with our normal daily routine, the way we used to do. So what's going to be our step 2 like that? What's going to be step 2?
So you
get the equity beta. So you get the equity beta using what? Using proxy company information. So what's the formula to get now? Do you have debt beta in the question? What is that person that is unmuted and is disturbing me? Do you have debt beta in the question?
Yes.
Yes, sir.
We have.
Oh, you are disturbing my class. What is this?
Mute now.
Who is this person?
It's okay. It's not hard. Just please hold on. Move from call. Thank you very much. A lot of people they are outside, are not able to join. They're disturbing me. Oh yeah. So what do I have next? Okay, so on gear, so formula to on gear. So you say your beta equity geared, open bracket. Then we do this insert equation. So you say your equity over your equity plus debt 1 minus t. And you guys said we have our debt beta now. So plus
Yes, we do. BD
plus BD plus BD debt 1 minus T. Like this, Abi?
Uh-huh.
So yeah now. So what my asset beta now? So yeah, so let me put this. Let me just copy this again. So what's my beta equity get? We said 2.5. What's the value of my equity of the proxy company? What's the value of my equity?
60.
Debt to equity ratio is 40.
So it means my equity is what?
100.
100.
Actually, I mean, I was in 60, which is fine. Let me explain. Now, debt to equity ratio can come in two ways. It could either be your debt. Listen, it could either be your debt to equity, or they say it is debt to total asset. Total asset, which simply means your debt plus your equity. Now, listen, what I'm saying is it could either be your debt. In the question, it could either give you debt over equity or debt over total asset. Total asset, which is your debt plus your equity. Now, what I'm not saying is, if they say, don't just look at it from the top of your head. If they say debt to equity is 40, it means debt is 40, 60 is, the remaining 60 is equity. Lie. It doesn't work like that. What I'm saying is, if your debt is 40, see, in everything you do, this is the trick to it. The trick to it is, in everything you do, you see this is your denominator. Denominator be this, I be numerator. Denominator, no. Hey, who is this one again? What I'm saying is, this your denominator at every chance. This your denominator here must always be 100. This one that is down, it must always be 100. Now, if they already told you that it must always be 100. Now, if they told you your debt to equity ratio is 40%, it means that debt is already 40. It means that equity is now what? Equity is 100. That's for the first scenario. But for this second scenario, debt to total asset, they say your debt is, let's still use the same 40%. They say your debt is 40%. So what will now be the value of equity? Don't forget that debt here is still going to be 40%. So what it means is, what are you now going to add to debt to give you 100? People don't understand what I'm saying.
60.
60, sir.
60.
Is it clear?
Yes, sir.
Yes, sir.
It's clear, sir.
Again.
So
Not clear, sir.
now, so that means what's the value of my, so what's going to be, so we already said that debt to equity is 40% and this debt over equity, so it means that our debt is 40 and our equity is 100 in this question. I'm going to explain again, but I need to finish solving this question as soon as possible. Oh yeah, so 100 Abi, over 100 plus 40. What's my tax rate? Oh yeah. Eh?
25%.
25. What's my debt beta?
0.4.
So you're changing the wrong equation. You're supposed to be changing the second equation.
Oh shit. Oh. This is why I don't like to rush to class. 100 plus 40. What's my debt beta? 0.4, Abi? 40. 0.25. 100. 40. 0.25. 0.25. What do I have for this first one? What do I have for this first one?
$1.92.
1. $1.92. plus what do I have for this other one?
0.09.
0.09. So what's the total?
2.01.
2.01. So what's step 3?
You reject.
Is to
Reject using company information.
So you say step 3. We get now this particular sir. Anyways, we get the assets better using own company information. So what's formula to we get? So you're saying your beta equity is equals to your asset beta
Equity, equity assets. 1 minus. Yeah.
1 minus 1 minus t. Now, what does this way want to do now? Do you want to follow not? Debt over equity, are yeah.
Sorry, I think it's 1 plus into bracket 1 minus 2.
Thank you. Yeah. What's my asset beta? 2.01. What's my tax rate?
0.25%.
25%. What's my value of debt of my own company?
30.
Debt. What is it debt to equity ratio too?
Yes.
What did they say it is?
Yes, sir, is assigned.
It's debt to equity ratio.
Is what? 30%.
Yes.
40%. So it's 30%.
30%, sir.
30%.
So it means your debt is 30 and your equity is what?
100.
It's 100.
Yeah, what do I have? What do I have?
0.36.
Huh?
2.36.
You guys should already know that this one that is here, it would most likely be higher than this one. I already told you why now. This one here, you removed something from it. You removed the financial risk from this one. Here now, you added back a financial risk. So this one is most likely going to. So if you are doing this one, you got something like anything that is less than 2.01, you should know that you're already wrong. Those are some of the check and balances that you can always use in exam. Yeah, for me, what's step 4?
The computation of capital asset pricing model.
Calculation of cost of equity using CAPM. Oh, yeah. So you say KE is equals to your risk-free plus beta open bracket your RM minus your RF. Oh, yeah. What's my risk-free?
5%.
So 5%. What's my beta? 2.36. What's my RM?
7%.
Is it market return or risk premium?
No, it's risk premium.
So 7%. So what do I have as my cost of equity?
21.52.
21 point what?
52. 21.52.
It's too much about 21.52. Yeah. So what, Kabi?
Yeah.
Yes.
This is step 5. Calculation of. If I was doing this in the exam, my cost of equity is 21. I'll be scared. I'll go and look at. I'll double check because in my mind, I even said it now that this thing is plenty. Is big. Figure is big. I don't really like big figures when it comes to this cost because my school of thought is they should be small. You guys know the WACC formula now, so I don't need to write it. So okay, yeah, cost of equity that's 21. People should not mind me. I'm rushing. Sorry, people should not. Don't mind me. But like that, I said you guys should do it. And if you guys had done it, I'm sure you would not be. It will not be a challenge. So what's the value of my? Is it 70, Abi?
Sorry, sir. Sorry. Please, can you? I'm having issues with this work. Please, can you write the formula, please?
No, I cannot. I'm very, very sorry. I really cannot. I've wrote work formula in this class at all, give or take 3 million times. Give or take. Please.
I've joined it late. I've not been on this platform.
Go and check our working note for cost of capital. Go and check our working note for cost of capital. You see there. Oh, yeah, what's my cost of debt? Yeah. What's my cost of debt, please? What is cost of debt now? You're not reading here.
6. Cost of debt is 8%. Like the government development bank was given a rate at 8%. So the cost of debt is 8% minus the tax.
Where did that person have 6%?
So
3 minus the tax.
Okay,
you minus the tax, 8% minus net of tax. That is
okay.
1 minus
Okay. Post tax is 6%. Okay. Sorry, I don't. This one's supposed to copy. How do I have? What do I have? People should just give me my figure. What do I have? People should give me figure. Just leave me alone. Don't mind what I'm doing. Just give me a figure.
16.92 for. Okay.
One what?
16.92. Then the debts 1.38.
Give me the whole figure. Give me my whole figure. My whole work.
17.93.
8%, 18%.
Where did you go this big? So AW equals to 10. Listen, that's work formula for the person that's looking for work formula. For the person that does not understand this debt over equity over debt to total asset, let me do it this way.
What is the tax rate?
What is what?
The tax rate. The tax
I think
is
the tax rate is not written. It's just a repeat of the
your
formula.
own note now. Debt over equity. I'll change it. Please, you understand what we are doing. That's cool. So please, you guys should go and be discounting this 18%. Just give me my discount factor immediately I get up. So for the person that does not understand this thing, what I'm saying is, at every time, they can either give you this or this in the question. You cannot pass this. Either they tell your debt to equity ratio, they tell your debt to debt plus equity. This thing is also called your debt to total asset. This thing is also called debt to total asset. What I'm not telling you is, at every time, chance or at every point, this your denominator here. It must always be 100%. This denominator here, at every chance, it must always be 100. So if they told you here that your debt to equity ratio is 40%, it means that debt is already 40. It means that your debt is already 40%. And since this must be always be 100, it means your equity is 100 now. That's what we did earlier. But if it was this other one, they said your debt to total assets, it means that your debt is 40%. And don't forget that this must always be 100. It means that this or that one must always be 100. And if this down must always be 100, this is also already 40. Debt is 40 now. So it means that anywhere you see debt, 240. So it means that this debt here is also 40%. And so what else do you now need to add to this 40 to make it 100 now? So it means that your equity here is 60%. So that's just basically what I explained. If it's debt to equity ratio is 60, but if it's debt over equity, this is your 100%. I hope that's clear. So yeah, discount factor. Don't know. So discount factor at 18%. Oh yeah. What do I have? 1.00. Yeah.
0.85. 847.
Mm-hmm.
Yeah, 2, 0.718.
Mm-hmm.
Yeah, 3, 0.609.
Mm-hmm.
0.516.
Mm-hmm.
0.437.
0.437.
That was my present value.
Yeah, 5. 0.445.
0.
Yeah, 5. 0.45.
0.45K.
No. Sorry, 0.45.
That's 1,029 times this thing.
Yeah, I thought it's
449.67.
Sorry, sir.
4 what?
449.67.
Like round everything up. I don't want decimal. I've not been using decimal since now.
450.
450.
Yes.
Mm-hmm.
Then 483.
484.
Yeah, 448 what?
483.
0.5.
Yeah, 3.
Yeah, 1. 409.
Don't you guys call for me and my team? Well,
Yeah, 3. 410.
Yeah, 3, 410.
Yeah, 2. 441.
Oh, what?
442.
442.
That was my MPV.
442.
That's my MPV.
Nine.
89.
Is it 9?
89.
Negative, Abby.
Positive.
Potato lover.
No.
I knew.
I never see a thing I never do from my class today.
Sorry.
Huh. One more.
I employ a gatekeeper.
Son. So this is your MPV of 89. So it means that they should take the project now, have you? So My major stuff here was this combined companies WACC and all those things. So please take note of some of the things I did there, so that you can always please do you have any question, please, anyone at all.
Hello, sir. Hello, sir.
Yes, sir.
If you ask me
Like,
question,
what
if you ask me question, raise up your hand. Why are you people doing like you are novices like this? How about now? People are falling my hand though. Judith Abel, are you in this class?
Yes, I am, sir.
Okay. Please go and watch our videos again. I'm saying some of comments like, yeah, Mr. Kendi, talk to me, please. Sharp, please.
I just joined and I'm even lost. I don't even know where to start from.
Sorry, yeah. Sorry, yeah.
The video on YouTube is not clear, sir. It's blurred on YouTube.
That one is not for me. Oh. There's nothing for me. My one is just to stream on YouTube. I would not
Go
know how
to
to
setting and
but there's
change
a
it
way
to
you can.
high.
Please, it's not here. Please, a message will be sent to you now to make it clearer. Please, and they've been sending it since. Somebody has been sending that message to all the group chat on how to make your YouTube clearer. So please go and watch that particular one and make it clear. Thank you very much, Mr. Peter. Please, question relating to this what I've solved. I beg. Oh yeah. Oh.
The big part said that it was assumed that the cost of capital is 13%.
In the question.
Yes, sir. The big part.
Oh, yeah, people should go and discount it with 13. Leave what I've done. Go and discount it with 13. Oh, I don't read it too. I thought I was supposed to discount what I got. No vex. Oh yeah, go and discount it with 13. I hope you understand what we are doing. I made a mistake and discounted with 18. But what I'm saying is the question says you should discount it with 13. So go and discount your own with 13. I've done everything else is clear to you. Just go and do it with 13. Yeah, Malik, talk to me, please. Sharp.
Okay, thank you very much, sir. Good evening.
Good evening.
I say God bless you for all you are doing. My question is, in calculating using the cap M now, you use in substituting into the formula, you use premium, market premium. What happened to the risk-free rate? Because I know that box, that bracket is not complete. So I want to ask, why did we not use the risk-free rate to arrive at our cost of equity?
You know my challenge. That's why I always say that I'm begging. That's why I think I would start allowing Apex to. I don't know how to do it, but I'll start allowing maybe from next diet that maybe after diet has started, maybe we don't allow students to join. No, sorry, it's not. This is not because of you.
Can't hear you.
Since in general, people don't wait. Can you guys hear me now?
Yes, sir.
I was saying that majority of these things are things that you would have spoken about. Because I see Miss Judith now also asking, why are we on gearing and re-gearing? Somebody's commenting, the person was laughing because he said, if you look at how, like, where do me as a lecturer, where do I start from? After I've used I'm not talking to you, Mr. Malik. I'll answer your question. I'm not talking to you, Mr. Malik. This is not about you. I'll answer your question. But I'm just saying in general, as a lecturer, it draws us back a whole lot. So please, what I always advise is try to watch the YouTube videos to keep up. It's not always comfortable. These things are on cost of capital. Go back, watch cost of capital videos so as to keep up with what we are doing. We will keep on discounting till the end of this diet. We will keep on discounting. So go back to YouTube. Watch all our cost of capital videos so you'll be able to keep up. So you'll not be asking me questions that are way behind. Anyways, Mr. Malik, RM minus RF, it gives you risk premium. The market return minus your risk free gives you a risk premium. So in the question, if you were giving a risk premium, what it means is automatically they've done that RM minus RF for you. So just go and use the risk premium like that. Risk premium equals to market return minus risk-free. Risk premium equals to market return minus risk-free. So once you are giving risk premium in the question, automatically means that whole subtraction has been done for you. Just go and carry the risk premium figure and put it there like that. I hope that's clear.
All right. Thank you very much, sir. Thank you.
You're welcome. Miss Judith, no, it's not because of you. No, I'm just saying in general. No. You have a right now. You joined late, which is understandable. If it was any of my students that asked me that question, problem for Apple. But you joined it and you already made that very clear, so it's understandable. Imagine Miss Fitzy and asking me why we are on gearing and regearing. I know go first come out time from this class first. Why have you been here for the past how many months? Anyways. Mr. Olawale, your question, please. Sharp, please. I need to explain it, PV.
I just want to connect to the last lecture. Anyway, when we get to a particular point where our profit after tax, our profits or net loss, not really profit, net loss, and we need to apply tax on it. You were mentioning something last very lecture that in a case where...
So which question are you asking me again?
No, the one we treated last time. I think that should be
question relating to what I solved now is what I'm asking you.
Babadon.
Question to what I solved now. Okay, you want to relate this one to it?
Yes, that's when we get to where when we get to where we are having like positive. We're having some working capitals that are actually inflows as against outflows. Then how do we actually treat it?
Like, I'm not hearing what you're saying. No, you're breaking. I don't know if it's from my end. It's breaking. Can everyone hear me? Is it my end? Am I the only one that is breaking at?
We can hear you.
Hello? I think it's my end. My network has gone.
We can hear you.
Can you guys hear me?
Yes,
you are breaking.
Yes, we can hear.
Yes, sir. We can hear you, sir.
Is it from his end? Is it breaking for everybody?
No.
Can hear you.
No.
Like, I mean, is the Mr. Olawale breaking to everybody?
No.
No.
No, sir.
Mr. Olawale, I can't hear you. I don't know if it's from my end, but I cannot hear you, please. Thank you. Is any other question, please, on what I just solved, please? Sharp. Oh, yeah. Can you guys hear me?
Yes, we can hear you.
Yes, sir. We can hear you.
Okay. So no question. Yeah. So let me move to what I came here to do today, which is introduction to adjusted present value. Now listen to me. I have just 30 minutes to explain this, and I need you guys to get it, whether you like it or not. You must get it. So you listen to me with all you have in you. If you have not been listening to me before, if you have felt like this man does not know what to say, this man has been saying shit since morning, this one, listen to me first. Later you will go and be looking at the rubbish I've been saying, but for this one, listen to me attentively. For people streaming on YouTube, I have 6 spaces in class in case if you want to join. For people streaming on YouTube, I have 6 spaces in class if you want to join. But anyways, listen to me. Now, what we want to do is adjusted present value. Listen, though. The whole story or the whole reason for us doing adjusted present value is because, first of all, imagine somebody just waking up. Don't forget what we're doing with NPV and with our normal cost of capital with our WACC of NPV now. The assumption was, okay, you are going to borrow money, you are the businesses, there's a financial risk. That's the assumption when it comes to our normal project specifically, that the business risk is changing and the financial risk is changing. And APV now woke up one day. Listen, APV now woke up one day and said, no, see, me, I'm assuming that, fine, business risk could change, but I'm assuming that financial risk is not changing. I'm assuming that, okay, you could go into any other business you are going into, but I'm assuming that you are not going, your capital structure is not entirely changing. That is, you are not going to, the financial risk of that business you are going to is not changing. That is where APV has now come in to tell you. Now, when it comes to APV, it's not different from what we've been doing earlier. Let me just go straight to the point. It's not different from what we've been doing earlier, but APV simply means this is how you get APV. The formula for getting APV now is, listen, just watch what I'm doing. Just listen to me. It's not hard. It's honestly not hard if you listen to me. Now, the assumptions of APV, adjusted present value. Now, the formula for APV is your base case MPV. This base case MPV is basically the MPV that you've gotten earlier, the same MPV that you've done. The only difference with this base case MPV and the MPV that you've done earlier is that you would never discount with your WACC. Chengbo, are you listening to me? The only difference with this base case MPV and the one you've done is you should not, you will not, you shall not, you never will. Don't ever discount with your weighted average cost of capital. What do you now discount with? You will discount with your cost of equity without doing WACC. I don't know if somebody's listening to me. Without doing WACC, you will discount it with your cost of equity. Now, there's now another trick to it. The trick to it is the cost of equity that you want to discount it with. You are discounting it with your ungeared cost of equity. This is what I'm saying. What I'm saying is, let me go back to this, my step. What I'm saying is, if you were supposed to do adjusted present value, the moment they give you, assuming they give you an equity beta in the question, the moment you get this equity beta, you will follow your step 2, you ungear it. The moment you ungear it and you get your BA, this BA as it is like this, as it is now, as it is now, just take this BA like this, sharp, like this, then bring it to your CAPM formula. This BA is the BA you will now use. Don't ever, listen to me, don't ever regear when it comes to adjusted present value. Don't ever regear when it comes to it. It makes sense now. Shebi, I already told you the assumption is that you are not going to borrow money. The financial risk is not changing of your own company. For proxy company, fine, their own financial risk can change. But for you, your own organization, your own, that's the assumptions of it. That's what I told you from the beginning. But your own financial risk is not changing. And since your financial risk is not changing, you don't have to incorporate any risk here now. You guys know the reason why we regain. We are again because we want to incorporate our own financial risk. But our financial risk is not changing now, so you don't have anything to incorporate here. So what it means is when it comes to adjusted present value, delete this regear. You are not regearing. Whatever you get from this your own gear, just carry it and come and put it in your cost of equity formula in your CAPM. Bam. Then whatever you get, take it like that and go and use it to what? And go and use it to discount. And go and use it to discount. Please, is that clear? We are able to answer me. Please, is that clear?
Yes, sir.
Yes, sir, it's clear.
Good.
Yeah, it's clear.
Since that is clear. Now, since that is clear, moving. I'm really struggling with network. It's now that network has started to be doing what I don't know. So, anyways, that is the difference with the base case MPV. That's for that. That's for base case MPV. Don't forget that your base case MPV could either be positive or negative, depending. Now, base case MPV, you will now subtract or minus financing, minus effect, say effect of and if what we are saying financing effect is we are basically letting you know that for this financing effect, the effect of you
Can hear you, sir.
Hold on, let me see if I can change the internet. Please, can you guys hear me?
Yes, sir. Yes, yes.
Can you
Yes,
guys
sir.
hear me?
Yes, sir. Go on, sir.
Yes, sir.
Hello.
Sir, we can hear you, sir.
We can hear you, sir. Please, can you guys hear me?
Yes, sir.
Clearly. Classic is not coming back.
He already dropped the message on the group. Good evening, guys. I will see you guys next class, and the time and the day will be communicated, but I'll drop an assignment for us later today to attempt. So, good night, everybody.
Please, before we go, hello, before we go, can we create a group for discussion, just like this WhatsApp group, so that in case you have questions, some of us are slow learners, some are learning fast, so that we can be communicating there.
We have one already now. We have one created already. How?
Which group?
What has been created already now? Group.
Which
We are
one is
not aware
that?
of-
Because me, I'm not even there.
What we can
I'm not even
communicate
aware.
with each other. That should be those
Even
that
me,
are
I'm
just
not
done.
aware.
We have a group already.
But we
Okay,
don't.
please,
I
can
don't.
you share the link to the group on the chat box?
Please,
Can
I'm
you
not
share the
aware.
link to the group on the chat box so the people that are here now can easily join?
Exactly.
But the
That's
people that are there already.
Yes, that's a good suggestion. Please
Yes.
do the math before we go. Since we are together now, please do it now.
So let's just wait and get the link before we all log out.
Okay.
Yes.
Okay, thank you.
Please, if you know you're on the group, please just share the link on the chat box. Now beg with the beg, we no do shakara.
Abeg, we know they do shakara for Itano.
Hello, I need help. I'm just joining. No, I don't know if anyone can help me. Please.
Everybody need help. The only thing you can get is to go to the what's it called? There's a group link. There's a link for the classes that have been old on YouTube, so you can easily go and watch them one after the other. Because that's what I'm doing right now. I joined late.
Oh, there is a group link there on YouTube.
Yes, they sent a link on the WhatsApp group then for all the classes that has held previously. So you can easily use that to go and watch the classes one after the other.
Please, can you forward it to me? Can you forward it to me, please?
We are not seeing it in WhatsApp. We are not seeing it there.
Let me
It's
check.
there, it's
Let
there.
me thank God somebody can corroborate my story. Okay, let me check for the link. I will put it on the chat box now. Let me just check.
All right,
because I know
thank you
that
very much.
he mentioned it.
Yeah, because they just
Sorry,
joined now.
but
They won't see. They won't see the
sorry,
previous
but they
link.
said it's someone mentioned that it's not clear when you watch it on YouTube. Can you explain how to go to setting and it will be clear?
I don't really have an idea. I'm
Although it's
this
not a
right
big
now.
deal.
Hello,
It's not
SFM.
you change the quality to higher
So,
quality. Hello?
okay, you will
You
change
the
your
high
quality. Okay,
Go to
okay.
quality,
Say,
then press higher quality. Do you understand? So it will
there
be
is
clearer.
720 MP, there is 480 MP, so you just set a higher MP. I think that's what they're talking about.
Yes, exactly.
Please, we are still waiting for the link. Thank you.
I'm searching the group to find it. That's what I'm doing.
Someone
Please, we're
send
still waiting for the
is
discussion
it
group.
the one?
Okay, somebody playlist. Hello.
Is this the discussion?
Yes,
group?
that's the link. That's the link. The guy that created the youth channel, I've tried to get it. It has no link. The guy that created the page, I've checked it. There is no link. So you use channel. Then we use channel to link. So let me go and find. We can find the channel again.
Okay.
Please, I want to ask a question concerning this adjusted net present value. If I'm not mistaken, did he say that we should use the 5 steps but exclude step 3? That's regearing. Can anyone hear me?
Yeah.
Yes, he said we are
Hello?
not going to regear.
Yeah, you're not supposed to regret.
He says we are not clear about what he says.
In the figure you carry to Capel and do this thing.
Okay, so what we got from ungearing is what we use as better on the listing campaign formula.
Yes. Is your better
Thank you very much.
figure you will use.
You did not send the link for the group now.
You did not send the link, you only send for YouTube. For the group chat.
Yeah, the other man said there is no link to that. I don't know how that guy did it. I've been trying to get the link, so
But
I've not
please,
been
can you
able
share the
to
guy's
see.
number?
How do we join?
Okay, let me look for the admin's number.
If
drop here
somebody
so that you guys
can find the admin and drop a message with
Yes,
the admin,
no,
so
we
the
don't need the
admin
admin
can add
number. So everybody can reach the admin later so that I add everyone.
Okay, please. Creating another one will make it disorganized because there's already one in existence and we can easily just use that one. So it's preferably to just choose one so everybody is in sync.
Please, can I ask a question in this particular thing we did now?
The floor is open. If we can answer, we
Please,
answer. Let's go.
Please, how did we get that cells? For year one, we have 1,050 naira or 50 million. Please, how do we get those cells?
Me, I didn't do the assignment though. For the people that did the assignment, please help a sister. I'm being honest right now. For the people that did the assignment, help a sister.
What exactly is your question, please?
That cells.
The sales figure. How did we come by the sales figures?
That sales figure 1,015 naira.
Okay, I think the actual figure is given in the question.
No, it's not given.
No, they gave us quantity of product and the selling price.
And the selling
Then you multiply it.
And the
But
selling
But if you
price.
multiply it by the selling price, it's not up to the amount. It's a different amount.
Yeah, the sale. Is it in current year? The sale, is it in current year or year one?
No, hello, can you hear me?
Year one.
Yes, we
The
can
price-
hear you.
We can hear you.
The price, a bag of cement sells for 2,000 naira.
You
Yes.
grow it.
And the price is going to increase at the rate of 5%.
Okay.
So you will now do 2,000 multiplied by 1.05. That will give you 2,100 multiplied by the number of bags in the first year, which is 500.
500. That is it.
500.
Okay.
Thank you very much.
Thank you very much. So we are okay. Thank you.
So you now to rate them by the second year rate by that amount and go down like that.
Okay, we keep increasing it.
Yes, by the year.
Yes. Times by the
Thank
VAT.
Okay, from what I have here, it seems like SFM is yet to have a comprehensive. The SFM is yet to have a comprehensive list for the link. But
Okay, the number drop. Thank you.
Please, I have a question though. Under that WACC, how do we get that 8? That cost of debt, that 8. How do we get it?
8% is DM.
Hold on.
Please, how do we get that cost of debt, that 8 in the WACC computation?
Okay.
You mean under the
is on the
what?
question.
It was calculated.
The last
So it was calculated.
No, it's in the question where the government development bank. Yes.
Fixed interest rate at 8%.
At 8%.
At 8, is it like
that's the cost of debt? Please, can anyone hear me, please?
I can't hear you. You said this in
Yes,
the
we can hear you. We can hear you.
This work, the work calculated, I'm getting 17%, but you got 18%. I don't know why.
You approximate.
You approximate. It's gonna be 17 points.
My progression is 16 point something, so you will not get 17 because it is 21.552 now. That's the cost of capital we got before now using capping. 21.52. If you do 21.52 multiplied by 70 over 100, you get 15.06. I hope anybody has something different.
Is 25.52 times 100 all over 130.
Oh, 25.52. Is it 25.52?
Let me check my.
Or 21.52?
21.52 is 21.52 times 100. I don't know why you use 70. It's 100. Equity here is 100. Debt is 30.
So that's for debt. Okay. I think the formula for WACC is cost of equity multiplied by equity over equity plus debt. Plus
yes,
cost of debt.
That's what I'm saying. That equity here is 100. I don't know why you use 70. Equity there is 100%. That is the value of equity is 100. It's not 70.
So
That was just maybe he has the reason of using 70.
Okay, so it will be 100 now. Hello, please. It will not be 100 over or just 100.
Is 100 over 100 plus 10.
It depends on the question. If your debt to equity is 30%, meaning that your equity is 100, you understand. Okay. But if your debt to total assets is 30%, meaning that your debt is 30 and your equity is 70. So it depends on the question. Okay. But this one is to equity. That's the reason why your equity is not 100.
Oh, good.
That's what I'm saying. I don't know why you use 70. That equity there is 100 because debt is debt to equity, not debt to total assets. So use 100, you have 18%.
Yes, I've got it now. Thank you very much.
That I asked earlier. The question that I asked, the 8% is in the question. Is that right?
It's in the question.
Is it the food drink division that has equity beta of 0.8? Is that the one you're comparing to?
The last question, then you will see equity to debt to equity, 30% of the company of concern. So the value of equity there is 100%, not 70.
No, my question is that under the WACC, the cost of the 8, I want to get where that 8 is coming from. In the calculation of your WACC, there is cost of debt plus 8. So I want to know the 8 coming from the question.
Please, I don't understand the question. Ask again.
Okay, my question is this. If you look at the computation of the WACC, there is 8 as a figure, as a cost of debt. Yeah.
Yes.
8. Where did they get that 8? That's what I'm asking.
Okay, you mean the 8?
Yes.
The 8 is a government development bank interest, fixed interest rate.
Okay.
Then you times it from your post-tax.
Okay. Thank you.
Everybody's gone already. Okay, these are the few links that I have. Gotta go now as well. But you can search on the YouTube and see classes that are there already. Bye, everyone.
Good evening. Is there another link or what? What's happening?